It's tax week on Wealth, and we've got everything that you need to know ahead of the April 15th tax deadline and what you can still do before you file. Today, we're talking about refunds, because why not? That's the fun part of it. New data from the IRS shows tax refunds are larger this year than last, up an average of 6.3%. The total number of refunds is also up by 1.7%. Joining me now is Andrew Gordon Tax Partner. All right, so we got to know what factors are making some refunds bigger this year, Andrew.
Yeah, Brad, it's great to be here, and that's correct. We're seeing in our practice that more clients are actually getting refunds this year, and that's because of two general factors: the factors that they can control, and then those that they can't, the general tax code changes. Now, first, in terms of parts that they can control, one of the most significant credits or deductions is the child tax credit. And so if you had a kid during the year, you can get an additional $2,000 of credit for your taxes. And up to $1,700 of this is refundable or will be paid directly back to you. Another big change potentially during the year is an investment in an EV or a electric vehicle. If you purchased one during the year, there's another credit that you might be eligible for. But then moving to the changes to the tax code itself, we saw that the standard deduction, which many people take instead of itemizing, in fact, increased this year to $14,600. And at the same time, the tax brackets themselves, the amount in each bracket increased with inflation. So if your income stayed exactly the same, you'll still get a larger refund because there's larger tax brackets.
And so with all of that in mind, two of the things that you mentioned are up in the air as to how large those credits will be going forward, even if we do see more of the continuation of the Tax Cuts and Jobs Act 2.0. And specifically, I'm thinking of the child tax credit and then additionally the EV credit, as on day one, President Trump had talked about rolling back some of those incentives. So how will that make the next tax filing season next year even more of a different or a comparable significant change?
Yeah, that's right, Brad. The Tax Cuts and Jobs Act, which was passed several years ago, is actually set to expire this year. And two of the key provisions, the child tax credits and EVs, also set to be reduced if this lapses. Now, President Trump has indicated that he wants it to continue, and in fact, to increase some of the deductions as well. And so there's a lot of hope that it will continue and that these deductions will exist in future years. But for now, it's yet to be seen.
And so how can you adjust your withholdings if you're getting a large refund? Because that essentially means that you're loaning more to the government than you need to on the outset in pre-tax dollars.
You took the words out of my mouth, Brad. If you're getting a large refund, it's not necessarily a good thing. I hear from people all the time, hey, I got a large refund. But the reality is that you've given the government an interest-free loan. And that's because your refund is the difference between your withholding and the tax calculation come filing time. And so if you're paying too much in withholding, you're going to get a large refund. And so a way to counteract that is to reduce your withholding. Now, at the end of the year, you might get less of a refund, but that means more cash in your pocket every month.
Okay, you got some tips for us to help make the most out of your refund. What are they?
So you've got more cash in your hands now. Let's put it to use. And one great way to do so is to pay high interest loans, be it student loans or credit card loans. If you've got some high interest loans, let that money be put to work and let's reduce them. Another way is to invest in retirement. A way to reduce your taxes is through tax deferred retirement accounts. And now that you've got more cash on hand, perhaps increase your investments in retirement. Interest rates are also high right now. So rather than just having the money on hand, put it into a high interest savings account. And finally, consider bolstering or building an emergency fund. You never know when you might need some additional cash.
Andrew, always a pleasure to grab some time with you. Great insights and tips for our viewers out there. Appreciate it.
Thanks, Brad.